Okay, so today's lecture is on cups and handles. So before we get into the video, we're going to be doing a series of lectures. So if you guys didn't see the previous one, I suggest you go check it out. And basically, we're going to be talking about a bunch of charts and patterns and how we can use these to create an arsenal of tools that is going to help us day trade. That being said, what is a cup and handle? So it's a technical chart pattern that is characterized as cup and handle, hence forming a teacup. So it's a bullish chart pattern that predicts future price movement that goes to the upside. So you want to avoid cups that are shaped in a V shape rather than a U shaped. You want to look for a nice rounded base. You want to avoid handles that extend lower than 50% of the cup formation, and you want to look at the volume. The volume should be low on the declines and on the base, and you want to see a nice spike when we start to head upwards. So now let's talk about a real life example of an actual teacup, because I want this to be innate for you guys, right? I want you guys to be able to look at a chart and automatically spot it once you see that chart. So cup and handle, we got a real life example here. So let's say from here to here, it doesn't exist yet. And basically, we're going to form this cup and handle together. So cup and handle is formed when a security corrects from a high. So let's say this is the high and we start to correct. We come downwards and then finally the bulls come in and we start forming this nice rounded base. We start to see a lot of support. It gets strong over here. And then we see a spike in volume, which causes the stock to go upwards and retest that previous high over here. So now we got the formation of a cup. So what happens is we see resistance and then we start to head downwards where we do sideways trading on a slant before we see a correction to the upside. So that's basically what's going to form the cup and handle. And now we're going to look at a real stark pattern right here. Did I just say stark? Alright, a nice stock pattern right here. So as you guys can see, we have the movement to the upside. See the correction. We come downwards, the bulls step in. We start to get this nice rounded bottom over here. Nice good base. And then we have a nice run to the upside. We test the previous high, and then we get rejected, which we start to create that handle. We see the sideways trading before we break out of the resistance over here, and then we get confirmation on the upside. So now let's look at a real life example on Intel. And basically, I already have it drawn out over here. Basically, what happened is we came upwards, and then we had a correction. So we came downwards, we both stepped in, right? We start to see this base form, and we see the volume start to kick up. So then that means we go upwards to retest that previous high, which is over here. And as we make our way to the upside, we see the resistance, and that's when we start to create that handle. And as you guys can see, we do the sideways trading before we see a nice breakout and then confirmation that leads us to the upside. So just like many other stock patterns, we're going to see inverses. So you can have a bullish cup and handle, and then you can have the bearish cup and handle, which would be this example right here, which is basically the same thing, just flipped upside down. You know, we get the base forming up on top, and we test that high. Actually, this would be considered a low. So we test that low over here, which is the previous low, and then we create that handle before we head downwards. So that's going to conclude today's lecture on cups and handles. And if you guys find any value in these videos, do drop a like and a sub, share the video, and let's get it.